Architect Partners is a leading crypto-focused investment bank and M&A advisory. They've worked with top-tier clients just like these. And in this podcast, we're going to share valuable insights with one of the partners on what's going on in the world of crypto capital raising, investment banking, M&A, and more. Elliot is specifically a thought leader and expert in the world of crypto M&A. I've been long time following him on LinkedIn and just sharing valuable insights. And so, Elliot, welcome to the podcast.
What's up, Jeffrey? Great to be here. Appreciate you having me on. And the timing on this is very interesting, given what we're just coming off of in 2022 and where we're going in 23.
Nice. Well, Elliot, just in the world of crypto M&A, capital raising, if you can share a background about yourself and your firm, and would love to get into it.
Yeah, Architect Partners, we are a crypto dedicated M&A and strategic financing advisory team. There's over 12 of us on the team today, based throughout the US, which makes us the largest team globally dedicated to servicing crypto, blockchain, and the Web3 ecosystem. My background is I spent 20 plus years in capital markets, sell side consulting, 10 years on the buy side. As I sat on the buy side on a trading desk, I was thinking a lot about what's next. I did not get a chance to participate in what happened with the internet. And I thought that what that technology did to society and to humans and culture was transformative, and really wanted to be a part of something like that. And so when I was I bought my first Bitcoin in 2014. Took me about 4 years to figure out whether or not it was real. And in 2018, jumped into the industry full time to understand if the technology could do what it said it could do. And if the answer to that was yes, then how else the technology could help bring us into, help transform us into the next phase of human evolution.
That's a great just connection and correlation to the internet era. And if you think about the .com bubble and just how capital is chasing deals, and how does it relate now to where we're at with crypto, blockchain, and us being at our current stage? And
the good news is history repeats itself. And so, like, as you mentioned, the .com boom and bust, as well as the global financial crisis, I think our industry may have just experienced both of them at the same time, given that 2022 was a combination of high-flying valuations to start the year, a lot of capital flowing into the industry and the technology, and I'll just use cryptos to reference crypto, blockchain, Web3, and the technology as a whole. So a lot of capital flowing into crypto at high valuations. And we also had an over leveraging in the system. A lot of things that we were seeing in the market were driven by too much leverage. So the combination of the capital flowing in, way too much leverage in the market, we just needed a couple of catalysts in order to find those points of vulnerabilities, which unfortunately or fortunately unwound, that we saw happen in real time. Just a couple of comments on that. For those of us that have long-term views on crypto, this was needed. It's generally believed that there was a lot of bad acting, irresponsible behavior, sometimes unethical and immoral behavior. And we didn't have an ability to show what it meant to have consequences for behaving like that. And fortunately or unfortunately, we are seeing the consequences of that there are ramifications for doing things the way that we're done. And hopefully, and I'm hopeful that going forward from 2023 onward, that the industry is going to act itself in a much more responsible and ethical manner. And I do believe that we are in a position to do that.
Words of wisdom right there. So how should companies and founders approach raising capital and almost on both sides of it? How do you see just the thought process behind that going
Yeah,
forward?
2023 got a lot harder. If it was harder before to raise capital, it is much harder to raise capital in 23. And we have a trust issue. So there's two sides of this. There's obviously founders that are seeking to raise capital, and then there's investors seeking to allocate capital to founders. One of the biggest challenges that we've had is connecting high quality capital with high quality founders. And how do we improve that going forward? Today, we're seeing success with founders who have proven that they have been able to operate or create their businesses by embracing kind of the do it the right way ethos, which, depending on what you're doing, is engaging with regulators and getting the appropriate licensing, understanding what it means to KYC and AML customers, and also having, we call it good hygiene, right? Good operating hygiene, which means, yes, having clear books and records that can be, looked at any time. Having good hygiene with how you are engaging with your customers and who are they and what do they need and what are you providing, instead of just putting a solution out there that doesn't really solve for anything, right? Being able to have founders surrounding themselves with people that have strong backgrounds, operating backgrounds, management backgrounds, product backgrounds, marketing backgrounds, whatever that may be, but really showing that, hey, it's not just me in this journey on my own. I've got a very strong set of leaders that have done this before that are standing shoulder to shoulder with me. So those types of companies are attracting capital. And even in 2023, now we're early in the year. Some of the numbers that we see we are coming off the worst funding period in crypto. Second half of 2022 was the worst back-to-back quarters that we've had since we've been tracking this data, going back to 2017. The good news is 2023, we're starting to see a pickup both in number of deals that are funded as well as capital that's being allocated. And we hope that's an indication of a further strengthening environment as we move forward in 23. But investors now, as you can imagine, also have to be much more disciplined in how they are performing their due diligence. And so everyone needs to assume that the funding environment it will be more difficult, but there is capital and still flowing into our sector.
Nice. So how should companies approach just in general, the M&A process right now? And when should you kind of seek that strategic alignment in both at the mature stage? Because I know that you've worked with a lot of notable projects out there. Maybe can you walk us through on how some of those have happened?
Yeah, timing. Well, to answer your first part, Jeffrey, timing is interesting today. There are a number of companies that had raised capital in 2021 and early 22 that were hoping that the capital would be there to raise another round in 2022 or 2023. And the harsh reality is it may not be there today. So founders are being forced to answer questions on, how do we survive? And the how do we survive conversation, either comes down to three things. We're going to access capital at a lower valuation or a down round than we previously did. We're going to cut expenses, operating expenses, people, in order to do what we can to survive. And then three is, can we find a strategic partner that we can either align with from a capital investment perspective or that we sell to? Um, with your question directly, what does the M&A thought process look like? We think that in this environment, we will see a number of founders and executive management teams come to that third option, which is, how do we find that strategic partner to sell our business to? Given capital will be very difficult, and despite making cuts to our operating environments, we may not be able to survive. So survival today is key. So how does the M&A process work, and how do you think about, as founders, if that's the right move for you? It's going to come down to survival, and that's basically it. There are very few or fortunate companies that are around today that can command, that can control their destiny on their own. Wow. And those groups are fortunate. And as you think about the thought process and the kind of requirements on what the implications of this decision will mean, that it's a very complex decision process, as you know, because it's one that's always very emotional. It's one that is fraught with uncertainty, because you had belief in getting to this point, but is the macro market there for you? Are the customers that are paying you there for you? Is the revenues that you're generating, are those dependable? Are the products that you're developing, are those going to be needed by the people that are still participating in crypto today? Most of those answers are out of founders and executive teams' control. And so, when you think about the survival mode and what that means, that's typically how these conversations end up evolving.
Wow. That's really interesting. So, in the broader tech space, capital, now that low interest rate environment's kind of gone, and the need for cash flow and revenues that are dependable, products that will be needed, what have you seen that shift? And I've been talking to layer ones as well, and where they are moving to these models of even just monthly retainers, where you have to use their platform and really the need to stay alive. But are there any trends that you're seeing in terms of making a company cash flow generating, exchanges and marketplaces do well on the transaction fees, and people are, any insights there?
Yeah, I mean, it's not a great insight, but it's worth noting. A lot of the revenues that we saw from 2020, 2021, and even early 2022 were inflated, or just fake, right? And the negative of that is, for those companies that were doing things the right way, it may have seemed like they were underperforming when compared to their peers that were reporting, very high revenues. And revenue is probably, revenue and profitability, the two largest kind of criteria for investing into a company. And in looking back, a lot of the companies, it was inflated. It wasn't real. And so the whole industry is suffering from but companies were generating XYZ revenue in these previous years, and now we're coming into the end of 22 and 2023, and those revenues just aren't matching what we saw historically, which makes sense for a number of reasons. So to your point, survival is all based upon showing that your product, people will pay for it, i.e. generate revenue. And That is what everyone needs to be focusing on today to get through this moment. Your example around layer ones having to think about a licensing type of a model is tough. It's tough for them because that's not how a layer one is built. It's not, there's a couple of layer ones that have that model and have been successful, but most layer ones aren't built on requiring users to pay a licensing fee because layer ones, their success is built on how many developers and activity are using them. And if you have any sort of impediment to doing that and making people pay to use your blockchain is certainly an impediment to that. So the industry now needs to think about revenue models, business models, what is sustainable, and what can get them through these next, year, 2 years until what I hope and believe will be non-speculative use cases of crypto. And having that activity come and really be the tailwind that drives the next iteration of sustainable business models in crypto.
Can you unpack that more? Those non-speculative use cases of crypto that you see real functionality right now?
That's the not even trillion, that's the quadrillion revenue question. But we are seeing green shoots in many different places, which is fantastic, right? So I don't like the term, but I'll use it because we do have a nomenclature and vernacular issue in crypto. So tokenization of real world assets. What does that mean, right? But I'll just use that because it generally refers to how do we take something that exists today physically or not and turn it into a digital asset structure so that there are more efficiencies to administer and hold that asset, not trade it, not liquidity. I don't think we're there yet, and I think we're far away from that yet. But I'll use the real estate example. It does make sense to have certain real estate assets in a digital asset form to be able to administer, own, and monitor that asset going forward. There are major organizations, the BlackRocks, the KKRs, the BNY Mellons, the State Streets, the Northern Trusts, major organizations that are talking about tokenization being the real value that crypto can bring to traditional industries. So I believe that, I've been saying I use 2030 as a timeline estimate, which, no one's going to want to sit here and say, oh, I'm going to wait 7 years for this stuff to happen. But I do say that by 2030, 75% of assets as we know it will be owned in a digital asset structure. And that includes, most equities and fixed income, that in futures, that includes things like gold and diamonds and copper. That includes things like real estate. And that includes data, derivatives, horses. There's a huge Pokemon cards. There's many, many things that we don't understand or think about as an asset that are assets to our respective lives. And a lot of that is going to be held in a tokenized form. There's a couple of impediments to adoption today. The first is identity, or how you access digital assets or crypto. It's difficult. It's hard. So we need either self-sovereign identity, decentralized identity, pick the term. But we need a way to make it easy for individuals and institutions to participate in the ecosystem, in what we have built. And until we make that easy, we're not going to be there from an adoption perspective. So identity just remains a very, very key component that the infrastructure just doesn't exist today. And then finally, payments is major and very competitive, and there are a lot of groups that are bringing quality payment solutions driven by crypto. We're just scratching the surface, but we got to make it easy. So the combination of identity plus payments, I think, is going to be where we see that adoption coming in and us getting to that billion users. And it's just back to the identity thing. It's similar to email, right? Like you never had an email, I can't email you. You can't sign into a website. You can't participate in anything on the internet, literally, if you don't have an email. So we need to make it that easy where some sort of identification allows you to participate in what is building in real time.
Oh, interesting. So even these larger institutional players, and you're talking Fortune 500, and you mentioned like KKR. So how are they approaching blockchain? Are they looking to tap into existing solutions? Are they looking to build on their own, or is it across the board? Or do you have any insights on just like how it works at that scale?
Yeah, in my view, it is very, very difficult and not just financial institutions, any traditional institution or incumbent to build an innovative product. And I'm not just talking blockchain or and crypto, just anything innovative. It's difficult to build. When you're building something innovative, you have to break things. You need to fail fast, iterate, and until you have something that works. And that type of failure appetite doesn't necessarily exist in most traditional organizations. But they do realize that they need to adopt innovation. Otherwise, they will get unseated from their positions. So I do think that we have a very nice path or a realizable path towards having innovative companies, and I'll go into crypto now. Crypto entrepreneurs that can build products that traditional companies can't build, and we use a term, acquire your acquirer, which means find out who do you think would be the ultimate buyer of your business. What do they want to see from a functionality perspective, from a customer's perspective, from a operating hygiene perspective, and go use that as your North Pole. And because we are going to get to a point where there's two routes here. We are definitely going to see crypto's versions of the Amazons and Googles and Facebooks, etc. They're being born right now, and they will come out of this phase that we're in survival mode, and they're soon going to turn into kick butt mode. And because of what they are going to be driving, traditional industries must keep up, and that's where you're going to start to see them look into say, hey, what did that person build? How is that product work? We need that functionality internally, and we know we can't build it. So we're excited about that path that's coming. When we're already starting to see that. We're starting to see groups starting to kind of, MasterCard is a great example. They've made three M&A they made 3 acquisitions in the crypto space. And more financial institutions are starting to follow suit. So that's an example of where we think that activity is going to increase.
Yeah, that's great. Yeah, MasterCard, in terms of even the settlements of these things, and you mentioned real estate, very traditional industry where I think, even healthcare, they still use fax machines. And it's crazy. Some of these technologies, right? The lift of crypto could bring a lot of value. And even,
Well, I mean, yeah, just on, health records, it's HIPAA mandates that physical health records at a doctor's office. So, I mean, you think about security in any way, shape, or form, like, I don't know who, doctors' offices aren't necessarily the most secure buildings. So we, we're operating, and we had this conversation, and I don't want to turn this into regulation, but at some point regulation needs to kick in. We're operating in things that were implemented 50 to 100 years ago. Those are the regulatory frameworks that we're operating in. It was just 22 years ago that the New York Stock Exchange existed, right? And 22 years later, we are able to buy, sell, trade, own crypto assets globally. So what is going to, and the velocity of innovation is only increasing. And when you start putting together emerging technologies like a chat GPT plus crypto, what's going to happen then? But the infrastructure just isn't there yet. It isn't where it needs to be in order to allow the entire world to participate. And so we're in this kind of start, stop, but push, 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 push. How much are we pushing? And we got to push in a responsible way, unlike what we did previously. But I ask everyone that is a doubter of these technologies, are we going to see more use of crypto in 5 years or less? Are we going to see more use of AI in 5 years or less? That's a very easy answer in my view. Did your volume?
okay, sorry about that. Back now. Yeah, Elliot, that was fun. That was fun insights, and excited for the future and for building. Anything else that you want to kind of share and just leave people with?
Yeah, look, I just came back from a conference in Dubai. And I went to this conference because I wanted to know or validate my beliefs that we are better off today than we were a year ago. And unequivocally, we are better off today than we were a year ago. And that says a lot to many who are doubting the industry, doubting the market participants, doubting the who and how things are being done, which is fair. But the people that I know that are using the technology and are building things that are going to be used in our everyday lives, those are the people that I'm surrounded by. Those are the people that I'm inspired by. And it's reinvigorating our conviction that we will be successful if we do things the right way. And for anyone else that has doubts, we're happy to talk with you. For those that have shared passion, we're happy to talk with you. Our goal is to make sure that we're helping high quality capital find high quality founders and companies, because this is the way forward.
I love it. This is the way. Elliot, what's the best way for people to contact you and stay in touch?
Yeah, I mean, architectpartners.com is, you can find our website. My email is elliot@architectpartners.com. LinkedIn, Elliot Chun. Twitter, Elliot G. Chun. And Telegram, Elliot_Chun. Awesome. Or reach out to Jeffrey and he'll put you in touch with me.
Good stuff. Well, we have to have you back, Elliot. Great insights, and hopefully it comes sooner than 7 years, right?
I'm with you there. Thanks for the time, Jeffrey. Thanks, awesome, everyone, for listening. Really appreciate it.
Thank you.